Let's start with the topic. What are adjustments? Adjustments are the items that don't appear directly in the trial balance, okay, but need to be accounted for before preparing final accounts. Okay. See, they usually appear outside the trial balance, often in additional informations and affect two places in the final accounts. Okay. Uh, we have already learned golden rule. Every adjustments affects two account. That is called the double effect. Okay. Let's go over the top adjustments you must have to know. Okay. See, closing stock, outstanding expenses, prepaid expenses, acquired income, income received in advance, depreciations, bad debts and provisions for doubtful debts, and lastly, interest on capital and drawings. Let's now go through each one with examples and how they affect the trading, PL, or balance sheet. Okay, let's see the practical example of adjustments. First, closing stock. Uh, the closing stock is the value of goods left unsold at the end of the year, and the double effect of it in trading account, credit side, and balance sheet, asset side. Let's see the example. Closing stock rupees 10,000, and see the effects. Uh, so it so it on credit side of trading account and on the current assets in balance sheet. Okay. And us then see outstanding expenses, the expenses incurred but not yet paid. Okay. C, double effect, aid to related expenses in PL account, debit side. Okay. And so on the liabilities in balance sheet. Okay. See the example, rent outstanding rupees 2,000. Okay. Aid to rent account in PL account, which is expense, that's why debit side. And so 2,000 on the balance sheet in liabilities. Okay. Now, example third, prepaid expenses paid in advance, but benefit will be received in the next year. Okay. See the double effect. Okay. Deduct from expenses in PL and show under assets in balance sheet. Okay. See the example, prepaid insurance rupees 1,000. See the effects, deduct from insurance in PL. Okay. And show rupees 1,000 under current assets. Okay. Then C, acquired income, which the incomes on but not yet received. Okay. See the double effect. Aid to income in PL account and so under assets in balance sheet. Okay. C, interest receivables rupees 500, and see the effects. Aid to interest income in PL and so rupees 500 under current assets of balance sheet. Now see the fifth adjustment, income received in advance. Okay, see the double effect. Deduct from income in PL account. Okay, and so under liabilities in balance sheet. Okay, see examples. Commission received in advance rupees 600. Okay, subtract from commission income in PL and so rupees 600 under current liabilities of balance sheet. Okay, and see sixth adjustment, depreciations. Okay. Reductions in value of goods due to wear and tear. The double effect of this adjustments. See, depreciations. Okay. So as an expense in PL account. Okay. And deduct from assets in balance sheet. See the example, depreciation on machinery rupees 2,000. Okay. See the effects. So in PL, and deduct from machinery in balance sheet. Okay. On asset side. Now see the seventh adjustments, bad debts and provisions. First, bad debts. Bad debts are the amount that won't be recovered from customers, and the double effect will be PL account, it to debit, it to bad debts. Okay, and in balance sheet, deduct from debtors. Okay, deduct from debtors. And see, provisions for doubtful debts. It is the estimated future bad debts. Okay, double effect will be PL expense and balance it, deduct from debtors. And see the eighth adjustment, interest on capital and drawings. first interest on capital, see the double effect. PL, expense side, debit side, okay, and balance sheet, A2 capital on capital and liability side. And lastly, interest on drawings, the all effect will be PL income side, credit side, okay, and balance sheet deduct from capital on liabilities and capital side. Let's go over some mistakes people often make, okay, ignoring the double effect rule, okay, and putting adjustments only in one place, and confusing outstanding with prepaid, and lastly forgetting to adjust closing stock. Okay, so be careful. Okay, see, here is a super quick recap of adjustments and their effects. Closing stock, trading account, credit side, and balance sheet, asset side, outstanding expenses, aid to PL, and also aid to liability. Okay, and debit expense, deduct from PL and aid to assets. Okay, then acquired income, aid to PL, and also in assets. Okay, and income received in advance, deduct from PL and aid to liability, here liability side. Okay, and lastly depreciations expense in PL, which is in debit side, and deduct from assets. Okay, and that's how adjustments work in final accounts. The key to presenting a true and fair view of business performance. Want a PDF summary or worksheet on this topic? Let me know in the comments. Don't forget to like, subscribe, and share this with your friends and classmates. See you in the next one, only here on Paper Coaching.